This is Sujeev Shakya, Chair of Nepal Economic Forum, a private sector-led thought center, welcoming you to this edition of Neftalk. An in-person Neftalk. We had one last week where we had discussions around Nepal and the world. And now we are following up with this second in-person Neftalk. And today it's a collaboration with WLC, the company that manages Business Oxygen Private Equity Fund in Nepal. So Neftalk is one of our signature programs of the Nepal Economic Forum that is built on the 3 C's. We contextualize, we converse, and we conclude. Generally, it features around 75 to 90 minutes program. We follow a democratic free seating, no formalities of spending hours on addressing people, no privileges, alphabetical order, and no conducting outdated rituals. It's just conversations. So today's format is going to be some contextualizations and then some conversations. Then we'll have some interventions from the floor and closing round, and it should be fun. And I hope, and I'll assure you, not hope, that we would be out of this room by 5:30. Today we are here to discuss about SME finance. Recently, the COP26 concluded. Nepal Economic Forum works on multiple fronts. So we have the Himalayan Circular Economy Forum that's led by our senior fellow, Mark Perrin, who is here. Renewable Energy Center, we have the Center for Private Sector Development, and where we try to push reforms, we try to look at what is required to push investments. And last week, here in this hall, when Her Excellency Ambassador Nicola Pollitt was speaking, she emphasized on why we need reforms, how we need to get to reforms, and also how Nepali diplomacy needs to work towards making investments possible. Business Oxygen is one of the firms that has been one of the first pioneers on SME venture funds, and it is looking at more interventions in the private equity market in the future, and we'll hear more in the presentations. We have stellar panelists today. Anupa, Rimal, Lamichhane, we are taking advantage of her being here from Korea, Regional Manager, Asia Pacific of the Green Climate Fund. We have Chandni Singh, Private Sector Development Advisor, British Embassy. Peter Mousley, Lead Private Sector Specialist from the World Bank, would be joining us virtually, and Siddhant Pandey, Chairman, CEO, Business Oxygen Private Limited. So we would begin the contextualization from a presentation by Ritu Pradhan from Business Oxygen, our partners for this event. And Ritu, I invite you to make a presentation, and you have 10 minutes and there's a clock in front of you.
Thank you, Sujeev sir. It has been stated at COP26 that Nepal needs an investment of $20.5 billion to meet the climate resilience goal and an investment of $46.4 billion to meet the climate resilience mitigation actions by 2030. Our Prime Minister recently stated at COP26 that we will be a net zero economy by 2045, sorry. And what we can say is that enabling private sector and unlocking climate finance is going to play a pivotal role in helping Nepal achieve all this. A very good afternoon, everyone. I'm here today to give you a glimpse about how we have been doing climate finance at BO2. Moving on to the next slide, I'd like to show you how we have been working across industries to build climate smart businesses in Nepal. With our investment in solar industry, we've not just been able to demonstrate the viability of building diversification into the Nepal's energy mix, but we have also been able to demonstrate the scalability as the company has been able to raise 15 times greater FDI from a fund based in Singapore. With our investment in biomass pellet factory, the plant is not just going to help in sustainable management of forest waste, but will also be creating 200 green jobs for the locals in province 2. With our investment to establish one of Nepal's largest commercial scale biogas plant, The plant is not just working to convert animal litters to green fuel, but is also supporting by raising additional income by $2.5 per day in 120 farms in Province 4. In few of our investments, what we have been doing is we've used the capital that we have invested to build climate smart infrastructure so that the businesses can increase the productivity and have sustainable business practices. And we also, what we tend to do is we introduce climate smart measures and ESG measures in all of our investments. Moving on to the next slide, I'd like to share with you all a small clip from one of our portfolio company.
I and my other partners, we saw an opportunity in Nepal where we want to be a small micro distributed utility of Nepal where we sell energy services rather than energy products. Beautiful investment came exactly at the time when we were about to implement CPA model, renewable energy as a service model, where we'll have to invest heavily upfront. Besides the investment, whatever they brought to the table was good, and we're following it, and our management practice has changed. Once the energy comes to the village, they not only light their home, they have also started entrepreneurship, like fresh houses, photocopy shops, furniture shops. On a macro level, these kind of businesses help the country in reducing overall import of electricity. Next 5 years, maybe we'll be trying to get megawatts of rooftop and maybe 350 per area.
Moving on, I'd like to share with you the names of our climate smart business portfolio, which we like to call as regenerative climate portfolio. Regenerative because these are businesses that are not just working for profit, but also working for the betterment of people and planet. And scalability and growth of businesses like these also helps in construction of circular economy. Moving on, I'd like to share with you a brief description about our portfolio companies, starting off with Gandaki Urja, which is at present one of Nepal's largest biogas plant located in the outskirts of Pokhara. The plant is able to convert 45 tons of animal litters to green fuel, which is 1.6 tons of compressed natural gas and 11 tons of organic fertilizers per day. It has been estimated that this plant is able to displace 1,500 tons of chemical fertilizer. As we know, we tend to import a lot of chemical fertilizer from India. And last year, it has been said that we imported more than 500,000 tons of chemical fertilizer, spending more than 16 billion Nepali rupees. And also, these kind of projects also helps in CO2 emission. It has been estimated this plant can reduce CO2 emission by 14,000 tons per annum. Moving on to our second investment, Saral Urja. Saral Urja has not just been able to demonstrate the viability of building distributed rooftop system, but also scalability. As I had mentioned in my first slide, the company with our initial round of investment was able to install 200 kilowatt of rooftop system across Kathmandu and is now in process of building more than 8 megawatt of distributed rooftop system across the cities of Nepal, and has raised 15 times greater FDI from the Singaporean-based fund Infraco. Our third investment, Bacchus, which is in the process of construction, will be converting the perennial forest waste from Sagarnath forest, converting 30 metric ton of forest waste to 20 metric tons of biomass pellets. This is going to be the first of its kind project in Nepal. That the green fuel will not just be displacing to some extent the use of coal, but will also be reducing forest fire risk in Sagarnath forest. And not just that, also targets to create employment to more than 200 locals in Sarlahi. Moving on to the next slide. Well, these are our climate portfolios where we have used our capital to build climate smart infrastructure. For example, in our investment in Dale, what the restaurant chain did by building an infrastructure, which is central kitchen, that with climate smart technology that allowed them to increase the product lifespan, that helped them increase the profitability, but also in reduction of waste. Likewise, in our investment in Godavari International, the company doubled its space of warehouse with climate smart infrastructure that not just allowed them to maintain the moisture level in the hardened cheese, churupi, which it exports to Japan and other markets, but it also worked with more than 300 micro dairies and more than 4,015 smallholder farmers in Province 1, creating alternative source of income. Moving on, I'd like to show you how at BO2, since the past 2 years, what we have been doing is we don't just measure the ESG performance and the financial metrics of our investment, but we have also been measuring how our investments are doing across the SDG goals. And we have been able to see how our companies are performing against the 11 of their 17 SDG goals. With our 16 SME partners, as of June 2021, there are more than 113,000 lives been impacted, and 33% of the workforce is being represented by women. Moving on to the next slide. As of June 2021, there were more than 783 SMEs working in the value chain, and we are working across 6 industries. So with this, I've come to the end of my presentation and like to finish off with a quote that the transition to low carbon and resilient growth can only be achieved with the help of strong private sector engagement, and funds like BO2 is just the beginning. Thank you.
Thank you, Ritu, for the presentation. So we now begin our panel, and may I request our panelists to come on stage. We have Anupa Rimal Lamichhane, Regional Manager, Asia Pacific Green Climate Fund; Chandni Singh, Private Sector Development Advisor, British Embassy, Kathmandu; Siddhant Pandey, Chairman, CEO, Business Oxygen Private Limited. And I think we just need to get Peter now booked in through Zoom. Hi, Peter. Can you
Hi.
hear us?
Yes, can you hear me? Sujeev, can you hear me?
Can you hear us, Peter?
Yes, can you hear me?
Okay, great.
Yeah.
Great, welcome, Peter. So we're going to, the way this panel is going to work is that we're going to have about 3 rounds, about 40 minutes of discussion between the panelists, and we'll open up to the floor for questions and answers, and then we'll have one more round of a final round of interventions, 2 minutes to close it. And this will be as conversation style, so panelists can intervene. And Peter, maybe you'll, I can see you, so if you want to intervene, just do raise your hand, and I think I'll just, can you hear us, Peter?
Yes, can you hear me?
Okay, great.
Yeah.
Great, welcome, Peter. So we're going to, the way this panel is going to work is that we're going to have about 3 rounds, about 40 minutes of discussion between the panelists, and we'll open up to the floor for questions and answers, and then we'll have one more round of a final round of interventions, 2 minutes to close it. And this will be as conversation style, so panelists can intervene. And Peter, maybe you'll, I can see you, so if you want to intervene, just do raise your hand, and I think I'll just help get the tech to connect to you. And Okay, so we saw the presentation from Ritu. We saw some contextualization. And now in the panel, we're just going to take the discussion further and to see how can we take the green financing discourse into the SME sector. Because on the larger front, the grid action plan was launched on the 23rd of September. There was another meet on the 9th of November that was hosted at ISIMO. The larger investments and different perspectives from the investment board has been coming. And we said, how do we now look at taking the discourse into what does it mean for SMEs? What does green finance mean for SMEs? So with that, maybe a round of introductions and what you do in 2 to 3 minutes. I would start maybe with Anupa and an introduction, 2 to 3 minutes on what you do. Yeah, you need to put your mic.
Thank you. Can everyone hear me? Is this working fine? Thank you so much for this opportunity, and it's definitely a pleasure to be part of this panel discussion today. I'm Anupa Rimal Lamichhane. I'm the regional manager for Asia at the Green Climate Fund. For those of you who don't know Green Climate Fund, maybe a little bit on that. Green Climate Fund is the largest global climate fund with 10 billion climate funds for action. So we work with developing countries. Our mandate is to work with developing countries, raise and realize their climate ambitions that they have. So we definitely work with Nepal as well, like other developing countries. So what we basically do is we help countries in 3 different, maybe if I can just put it into 3 different boxes. One is we help countries to help them to access climate finance through building their capacity or strengthening their capacity that's needed. And then we also look into strengthening their policies or reforming policies that is required for those climate actions. And then we also try to help facilitate transformational projects at the country level, working with different private sector and definitely with other public finances as well. So we do have a very strong private sector facility dedicated to really work on how to really work and engage private sector into this whole climate spectrum of the climate finance space. Over.
Thank you. Thank you, Anupa. Chandni?
Good afternoon. My name is Chandni Singh. I'm the Private Sector Development Advisor at the British Embassy in Kathmandu. At the British Embassy, we're very keen to support the Nepali government to meet its COP targets. And we hope to do this by supporting green recovery and also green growth. Our portfolio has 2 separate strategies, let's say. The first one is on the infrastructure projects and PPP projects. In this, we work with the Investment Board of Nepal to develop a pipeline for international investments. With the Investment Board, we're also actually supporting them to receive accreditation from the Green Climate Fund, Anupa. And in addition to that, we're also working with a local financial institution to raise a green bond. On the SME front, we've closed a project that has been very successful in supporting access to finance in Nepal. This project has also supported local financial institutions in developing targeted financial products for SMEs. We also have a renewable energy program that is working with SMEs in the renewable energy space, looking beyond just hydropower, looking at solar, biomass, what have you. Biogas. And this project has a viability gap funding, which supports or de-risks private sector investments in the renewable energy space. As we move ahead, we're also looking to create an enterprise development program. And here also we will be supporting SMEs, much like what BO2 has done, in developing social and environmental risk assessment and safeguard measures. Thank you.
Thank you, Chandni. Maybe I'll call on Peter to make an introduction and in terms of what do you do at the World Bank?
Thank you very much, Sujeev, and my apologies to everyone that I wasn't able to make it over to the hotel today. So my name is Peter Mousley, and I'm based in Kathmandu, and I oversee and manage the World Bank's finance and private sector operations in Nepal and in a few other countries in the region. Climate finance is a very new game for us in this region, so I look forward to sort of discussing more what the future may hold for us. At the moment, a lot of our focus is on addressing post-COVID implications to the financial sector. So a lot of our work is targeted on those types of issues, as well as mobilizing greater use of financial technical fintech type solutions. Further, also supporting the development of the capital markets system in the country and supporting organizations like Business Oxygen with legal and regulatory reforms that we work with the government to develop. I'll stop there. Thank you.
Thank you, Peter. So maybe Siddhant Pandey.
Thank you, Sujeev. Business Oxygen is a part of IFC's Global SME Ventures, and Nepal was one of the first players in this area of financing SMEs. Our other partners are Climate Investment Funds and the FCDO. With Climate Investment Fund investment with us, all our investments have ESG measures and climate smart approaches to our entire process of investment. We don't look at investments as a impact as a byproduct of our investments. It is an intentionality from the start. Hence, we are able to and have been successful in introducing ESG measures in this economy. You can just imagine when earlier this new asset class was introduced, private equity, reaching out to the missing middle where these SMEs were not getting investments from the banks and financial institutions due to lack of collateral security. Our intervention has been able to enable it. However small the intervention, it is a start. However small the intervention is in ESG measures and climate smart approaches, it is a start. And you saw through my colleague Ritu's presentation how we have been able to intervene and introduce these climate smart approaches. And well, FCDO is doing the top-down macro level on transformation, as is GCF. We're doing it bottom-up on a micro level. So we need transformation change, and we need to work with the government on this. And we hope to discuss further on that later on.
Thank you, Sid. And I think I just also wanted to welcome people who are watching us on Facebook Live. This is being transmitted live on Facebook, and it will be also later on the program would be uploaded on the Nepal Economic Forum YouTube channel. So we would go now into the first round, and I think I'll start with Anupa. In terms of sort of GCF, you also said that it works with the private sector, private funds. So maybe some examples you'd like to share from some other countries that you're working in, that where GCF is working with the private funds or the private sector.
Yes, definitely. Okay. Yes, GCF actually works with private sectors. We also work with private fund managers or equity managers. What we do is GCF has the way it works is through accredited entities. So any investment that we do is through accredited entities. So accredited entities could be private sector, could be public sector, could be an international organization, could be an INGO. It all depends on who is going to be working on the climate finance space and who is getting nominated by the government. So basically for Nepal, if I have to talk about, Nepal, the government basically nominates who is going to be the player in the country. And we also have international players who can be working, like for example, if you have, like if BEAD wants to work with the Green Climate Fund, you can be an accredited entity if the government allows and if the government nominates, or you can work with the international accredited entity as an executing entity and bring funds to Nepal. The most important thing here is about climate financing. So the type of projects that we fund has to be climate projects. It has to have a very strong climate science behind it. Why is it a climate project and why is it not a development project? Because that is the dilemma that we usually face. And that's where we really try to draw a very clear line as to where our resources go, because our resources are for the climate fund, and we are here to serve the Paris Climate Agreement. So,
yeah, any specific example you can give from some other countries where they are working with funds?
Yeah, I can do that. We do. We have if I have to talk globally, we have Pegasus Capital Advisors, who have been doing a lot of projects with the Green Climate Fund. They have already approved projects, 3-4 of them. where equities, loans, blended finance have been utilized. We are working with Japan MUFG, also again working with the equity funds there. We also work with World Bank and other IFC, ADB, and other partners, and bring in projects in the country. For Nepal, as of now, we have not been able to channel any funds through the private sector primarily. It's been through public institutions, but otherwise globally, yes. Like for example, if I have to talk about Mongolia, Mongolia has bank, Mongolia Trade Development Bank. They are already working very closely with the Green Climate Fund, and these are national entities. These are not international entities or not international organizations who have already approved a couple of projects on the private sector space and tried to mobilize resources for different kind of blended finance in the country. So yes, definitely with a lot of examples. Everything's available in the website, but I definitely can also expand on some of the projects that if there are any questions.
Yeah, thanks. I think I'll come back to you in terms of what would be some of the lessons we can take to Nepal. So I'll go to Chandni in terms of looking at, just scope. UK had hosted COP, and there's been a lot of discussions around opportunities on green financing. The grid action plan was sort of adopted here, the Kathmandu Declaration. So where do you see this going? Where do you see these opportunities emerging?
Thank you, Sujeev. I mean, I think the fact that I'm talking about this right after Ritu's presentation means that I can refer to it. I think Ritu has showcased very well the many ways in which SMEs can develop capacity to access climate finance. In terms of the sectors, renewable energy is one sector that we obviously will talk about and will continue to talk about. We've seen both BO2 and Dolma invest in hydropower projects, in solar projects, and in biogas project also, I think, for BO2. In addition to that, I think there is the agriculture sector. I think if we talk about agro-processing, that is an area where the agro-processing can work with the value chain and maybe green the value chain and develop resilient agricultural practices. That's another area. The third area is probably tourism. And of course, tourism is a difficult subject to talk about right now, but as things improve and we go back to some sort of normal state, I think tourism will continue to be interesting for Nepal. Tourism in Nepal is already based on natural, natural wealth. So, and based on, forestry based and rural based. I think as the forest cover increases, there will always be opportunities for SMEs to develop around even inside the national parks and forest areas. So these are probably some of these areas.
Thank you. Reminder to put all our phones on silent. Thanks, Chandni. So I would move on to Peter and to see, Peter, you can hear me. So where do you see as the World Bank in terms of the landscape on climate finance emerging, and what are some of the key gaps you are seeing in the ecosystem? Peter, over to you.
So yes, thanks, Sujeev. A lot of individual initiatives are being taken in sort of support climate resilient or climate friendly investment and financing. But from our perspective at the moment, certainly in Nepal and many countries, is that some of the fundamental changes need to happen across the financial markets, across the banking market, across the insurance market, across the capital market, because the types of impacts that climate can have on the balance sheets of these different entities and their borrowers can be quite profound and can create a stability risk. So, for example, at the moment, you can sort of separate climate finance from climate resilient financial sectors. Now, one of the problems with getting at a really financially resilient, a climate resilient financial sector is data, and what the regulators can obtain, what the borrowers, what the different private sector companies can provide, so that they can properly assess what the threat is to the balance sheet. So a lot of the work we're doing at the moment is around supporting regulators to generate regulations and legislation that help better govern the whole market against the threats of climate. And this can cover things from, the sorts of credit, financial risks, operational risks that can arise either from what we call physical threats, like a flood or an earthquake, which isn't quite climate, or the transition risks. For example, consumers stop buying certain types of services because they're not consistent with their value system around climate products. So these can have profound impacts. For example, a home that is affected by a flood may cause the people to not be able to pay their mortgage. That impacts the balance sheet of the mortgage lender and things like this. So a lot of the work now is looking at how we generate the data so that banks and other financial institutions, issuers, insurers can better assess risk and make more price adjusted services to people and accommodate that. It's also to look at disclosure, what information companies have to supply in order to show that they are being climate responsive. So that's the kind of issues that we're addressing at the moment. Again, and it depends on what country you're in. In more mature countries, you do focus more on climate finance instruments, and they can be guarantees, lending instruments, equity type instruments. But priority at the moment is really the general regulatory environment for ensuring stable, well-managed climate risk. I'll stop there. Thank you.
Thanks, Peter. No, that's very useful. And I think we will be coming here to, as we are talking about what Nepal needs to do and some of the gaps that we need to plug in. So maybe I'll move on to Siddhant to talk about, where are you seeing? I mean, Ritu made a presentation of what you've been doing, but going ahead, where do you see as, the opportunities emerging for funds like yourselves, like Business Oxygen and others in this, sort of the climate finance space?
Well, I see huge opportunities, especially in the climate financing adaptation, as I would like to call it. There's enormous possibilities there, starting with solar to the pivot from fossil fuel towards wider electrification demand. Now, the government in Nepal is starting to propagate that there should be more uses of electricity to offset our import of fossil fuel. But the problem here is that it's easier said than done. There's still a huge gap in distributive power system in our country. So that intermittent electricity that is coming in is a huge negative for many businesses and consumers. So solar rooftop solutions and other solar systems that are in play can be a huge additional to creating that gap for the consumers. The other thing I see is that, coal is one of the largest emitters of carbon. And just recently, India has allowed a 20% rebate for users who use biopellets instead of coal. Now, we need to lobby our government to do that. Now, our company will be producing just 20,000 tons. But what if we could replicate that in every one of the provinces in Nepal? Our import of dirty fuel like coal would be displaced, number one. Number two, the forest perennial waste that the forest creates is being used to compact these pellets into creating biopellets. And that circumvents forest fire, one. Number two, in India, what it does prevent is burning of open agricultural husks, which is creating enormous black carbon, which is literally melting our Himalayas. So, there's enormous opportunities moving forward. Biogas. Now, biogas is cheaper than LPG. Okay. Now, the government should at least try to give biogas the tax concession on VAT. And what we're also trying to lobby for is that other biopellets and other environmentally zero carbon emitting investment should have the same sort of treatment as the hydropower industry does. 15 years of tax holiday. Right now, there is no such thing. So, it's just a start. It hasn't happened yet. It's happening slowly. It's painstakingly slow. But I think the opportunities are huge as we make that pivot from fossil fuel to clean energy. And we are a drop in the ocean, but if we can scale up our activities, we'd like to see more of this happening. And I think Nepal, with its nominal carbon percentage of carbon emission in the global context, is nominal. But having said that, in the past 10 years, we have doubled our carbon footprints, which is not a good thing. So, if we can use the private sector to join hands with the government, and mind you, the government, I do not criticize the government in this area, because Nepal's government has been extraordinarily active in terms of dealing with carbon neutralization. SREP 10 years ago had an 80 million fund. Now, one of the greatest PPP projects in Nepal is the government building the transmission lines and the private sector building the powerhouses. I mean, what an incredible public-private partnership it is. Now, why can't we sort of filter that into other areas of climate smart approaches?
Thanks. I think with the first round, we do get the perspective of, sort of what GCF is doing, the sort of opportunities that can be there. We also heard of what FCDO is doing. We heard of, the gaps that Peter pointed out. And then, BOT is already there. And there's it's a $35 billion economy. So it's not a small economy anymore. And so there is going to be more opportunities coming up. So related to that, Anupa, I'll go back to you in terms of, looking at other countries, from your experiences working with multiple countries, what are one of the 2 or 3 things that Nepal should be mindful or could look at that could kickstart this, or accelerate? The kickstart has happened, but accelerate, the work around the green finance, and climate finance.
Just open my mask while I'm speaking, so it's much easier for me to.
Sure.
Yep, thanks. Yes, definitely, there are a lot of things that I think we can do in Nepal in terms of increasing access to MSMEs that we talked about, or increasing access to different private sector partners. I think there are a couple of options that what we do with other countries. Let me just look into that. For example, when we work with other countries, we work through green credit lines. Those are some of the options that also could be looked into in Nepal. And when we work through green credit lines, we work through green credit lines to local institutions, either through developing banks or through direct access entities. So when I say direct access entities, I'm talking about national partners in the country, because we can also work with international partners. But like you said, we have so much of strength already in Nepal. We have partners in Nepal who have the capacity. What I've seen, and this is some of my experiences working in the region and also globally, because prior to managing Asia, I was also working in Latin America and in Africa, and helping those national institutions build their capacity in terms of engaging and working on climate finance projects. What I've seen is definitely what the government needs to do is prioritize these projects. That needs to be part of the climate finance. Definitely, there are a lot of funds available with the Green Climate Fund, with other bilateral donors who are also interested to work on this, work in the climate finance space. So it's not just Green Climate Fund. There's many other partners as well in this space on climate finance. What needs to be done is prioritize what are the projects that the country needs. We have NAPAs, we have NAMAs, we have policies, we've done our vulnerability assessments. We have a lot of these policies in place, and then very correctly, as mentioned by Siddhant, that we do have, government has been very, very proactive on doing these kind of policies and voicing our opinions or advocating the vulnerability of Nepal in different forums. So what we now need to do is identify those priorities. What are those really key projects that we want to bring into Nepal first, and who are the partners? What type of projects do we need? Are we only looking for grant projects? Because those are then completely different sector or different type of projects. If you are trying to look into climate finance space where you want to use different kind of financial instruments like loans or equities or guarantees, then the type of projects are going to be different. It might be really heavy budgeted projects, but there are possibilities available. So, but Then what you do is then you get into the space of developing those type of programs or originating those projects. And for example, with Green Climate Fund, we have such facilities available where we do provide project preparation facility of 1.5 million for each project once the concept is being cleared by us in terms of that it has a very strong climate rationale or climate science in terms of the project can be a climate finance project. And then we try to help that entity in developing those projects. So one is looking at what are the priorities. Two is, okay, there are funds available to also build these type of projects, if that makes sense. And then third, which I have seen and have been talking about it many times also in different forums, is building the capacity of the entire value chain. Because just developing projects, climate change is a very, it's not a new thing, I would say, because there has been changes ongoing, and we are definitely adapting to it, but it's happening too fast. So people do not have time to really sit and relax and plan out what needs to be done. They need to act now. It needs to have urgent action. In order for us to do that, while we are working on the projects and developing the projects, we need to also look into how are we going to implement these projects? Do we have the capacity to implement? Otherwise, it's a very long shot if we start doing one by one. So I feel sequentially, we need to look into development side, we need to look the capacity strengthening side, and look at the entire value chain of how do we build capacities at different sectors or different partners, so that the projects that are going to be coming into the country could be implemented. And one last thing is the enabling environment within the system, because if we would want to work on different type of projects or private sector projects or bringing private sector into the climate finance space, we need to look into whether we have the right policies. Do we need to amend these policies? And if we need to do that, then when do we do it? Like I said, I think once we prioritize what needs to come into the country, then you start looking into what needs to be done at the institutional level in terms of the strengthening at that point. Then we look into the aspect of different structures, and then building the capacity or strengthening the capacity of the partners who are part of the entire value chain. So these are some of the pointers that I can probably talk about for now.
Thank you, Anupa. You raised some very pertinent issues, and I think I'll come because for Nepal Economic Forum, the policy paradigm is of our interest, and that's something I'll come back to Siddhant a bit later. But I mean, you build up this whole value chain and the capacity building around that, and sort of upskilling, or what we may call it. So I would move to Chandni to talk about what are some of the work that perhaps FCDO is doing in terms of the capacity building work, or I would say in a larger context, removing the constraints around, sort of trying to push this discourse and making climate finance and different tools available and possible. So one is the policy constraint part that I'll come to Siddhant later, but yeah, the constraints that you're working on.
Thanks, Sujeev. I think the constraints are very similar. The constraints that are of importance to us are very similar to the ones that Anupa ji has mentioned. The first one is on capacity, and the other one is on the ability to access finance. On capacity, I think SMEs still do not have the capacity to assess their environmental and social risks. Of course, we have funds that come in with DFI investments, which support their investees to develop these capacities. Dolma and BO2 both are doing this. There are also some movement in the Nepali market where the Rashtra Bank has asked commercial banks to monitor their ESG risks in their investments. But there's a question about whether the financial institutions themselves, barring a few, have the capacity for this, and whether the SMEs themselves will want to invest in something like this. So there needs to be structures in place to support, I think, both the financial institutions and the SMEs. And on the second side is on access to finance, right? So how do we build capacity? Another way to do it is to bring in FDI at different stages of SME growth. And right now, some of the constraints are very similar to the constraints for FDI. The DTAs, the threshold, things that would prevent from capacity building of SMEs. There are already some discussions on maybe easing the FDI regulations for SMEs that have an export focus. And I would say, why wouldn't we do this also for something like climate finance? I think that would help SMEs access climate finance much better. Thank you.
Thanks, Chandni. Maybe I'll just now move on to Peter and sort of look at from also World Bank perspective and the work you've been doing to see that where are some of the possibilities of DFIs that come into funds, the World Bank that looks at sort of TAs and working with the government, and then the private funds, sort of working together, collaborations, because there are constraints to remove. Of course, there are policy issues to be looked at, but there are constraints to be worked on, and also there are opportunities. So where do you see some of these coming together or converging? Peter, over to you.
Yeah, thanks, Sujeev. Well, I mean, as everyone knows, the bank lends to governments. We don't lend directly to private entities. That's our sister organization, IFC. So we're very much focused on the policy and the enabling environment for these type of opportunities. And some of them are really fundamental. I mean, some of the restrictions currently on any sort of foreign capital coming into the country is not insubstantial. I mean, that was touched upon by someone earlier. And I must admit, I do have cautions about adjusting the threshold for multiple variations. There's no evidence globally that that is the best way to go, although it may be the second best way. So as I said, mostly we're focused on trying to get a policy and regulatory environment that is really encouraging of investors to sort of come into the market, is encouraging the financial institutions in the country to be more sort of responsive. For example, on ESRM guidelines, they're not specific about climate, they're very broad, but there is specific issues related to climate finance that they don't address. I'm very pleased to say all the regulators are looking to progress in this area, and it's a frontier area. This is not unique to Nepal. It's a situation that even the most advanced regulators and markets are struggling to address effectively. But as I said, it's been very encouraging to see the extent to which the key regulators, NRB, SEBON, and Bima Samati are looking to see how they can adjust. It won't happen overnight. It requires not just that regulations are changed, but also the market, as other people have said, the different players in the market have the capacity and the awareness as to how to deal with these things. So a lot of capacity building together with legal and regulatory reform is necessary. And that's pretty much where the World Bank's focus is in Nepal. Now, in other countries, very quickly, we're at a different stage. So we're working on green guarantee programs, for example, in India, which I'm involved in. But again, you sort of enter at the place where you see the critical difference can be made relative to what other partners are doing. So IFC is working very closely with different DFIs in different areas. That's their comparative advantage. For us, it's more on the broader legal and regulatory and enabling environment and capacity building. I'll stop there. Thank you.
Thank you, Peter. So I'll go on to Dr. Siddhant in terms of, we've been hearing on constraints, we've been looking at opportunities also, but the key is on the regulation part. What are 2 or 3 things that we really need to, sort of from a policy paradigm perspective? There's been work that regulators are doing, but from a policy paradigm or partnership paradigm, what are 2 or 3 things that you can think that move ahead? Yeah.
We'll need a whole new session for that alone. But I think one of the biggest thing that's really hurting us is the harmonization of rules, regulation, and acts. One contradicts the other and you're going in circles. And because there's no communication between the ministries and every bureaucrat has his own translation of the act or regulation. So it's very difficult. It's ad hoc basis at best. So, the one who does, in our case, the investor is the one who has to go through those delays. But having said that, there are some positives as well. One of our investing companies who is extremely successful in lobbying the government in introducing net metering. That was a policy change. Now we have net metering for households that can have solar home systems. That is an incredible pivot towards creating an alternative energy mix in the country. So moving forward, we also, if the government is actually post COP26, I'm just going to be restricted towards the climate aspect of our financing. If they are going to be more um, sincere about saying that by 2045 we will be net neutral, and we want 25, they're going to get $25 billion worth of climate financing, then they better reform their FDI processes. Not only the threshold limit that needs to come down, because climate smart approaches needs to come down to the SME level, and 5 crore, or at today's rate of exchange, $416,000 for an entry threshold is just not realistic for a country of this size, okay? Especially when you have 20% of the GDP is SME driven. Furthermore, in order to make climate financing more deep-rooted and endemic, they need to facilitate tax privileges, income taxes, tax holidays. We'd like to see more of that, and especially for investment companies, private equity investment companies like us should be allowed to solicit for funds from wherever, at whatever the threshold, and be able to expedite our process of investment. Now, what's happening is that you have this initial environment examination, they call it, which takes months and months and months. And an investment that would probably be processed in 3 or 4 months can take a year or even a year and a half. So, the sense of urgency isn't there. I think listening to Peter, I think this is the intervention that World Bank can come in to sort of put its clout on the government to ensure that investments are easily accessible. And, for Nepal, if we're going to reach not only our climate aim, but also be a middle developed nation by 2030, we need something like $22 billion a year of investments. We're not even a fraction of that right now. So policy changes can happen with the private sector indulging the government and persistently harping on them. And it has shown. Sarah Loza, when the CEO is there in the audience, they were very active when they brought the government changed the net metering in. And there's so much more. Like earlier I mentioned about the carbon, the biomass taxes, so the VAT is still imposed on them, and also subsidies for industries that do buy biopellets to displace carbon. Now, these are sort of policies that I think the government should walk the talk by showing that it can be done.
No, thanks. I think, before I open up questions from the audience or comments, so if there are any pertinent questions that you would like to make to another panelist, or any interventions you'd like to make before I move on. So if you want to have anything you would want to ask.
I have a quick question for Anupa. So what's holding you back from, why is the reason that the government has to identify the private sector for your intervention? Why can't it, it's like going to the Red Book for the multilaterals and the bilaterals. Can't you just directly engage the private sector through, of course, open competition? Because, that has shown more progress and more results than going through the government.
Okay, these questions are definitely quite heavy for me. I'm just probably going to talk about the way the Green Climate Fund was governed or was enacted. So basically what happens is the country ownership is the essence of the entire climate finance space for the Green Climate Fund. So we are bounded by country ownership. So what we are saying is, if a private sector is required to be part of that project, because if we are using different kind of financial instruments, not only grants, then definitely there's a space for private sector. So it is for the government to organize multi-stakeholder engagements within the country to identify what type of projects needs to come in, and then identify the partners that they want to work with, or the partners that they would like to can also come forward and discuss with the government on how they can contribute. Because it's not just only waiting for the government to invite you, but you can also go to the government and then share your plans. And that we have seen that happening in many other countries as well. Where GCF comes in is GCF comes in to play the de-risking role of the climate investment and mobilize finance at scale, because that's where we are and that's what we can do. It's not that we are waiting for the government to identify a private sector or the private sector to be identified by the government. It is about what is at stake that needs to be addressed at this point of time. I think that's the most key aspect here, which is, it can be, I mean, I have so many examples in terms of the type of projects that we have done in countries. Like just for in East Africa, through Acumen, there's a fund that was created, Kawasaki Venture Fund. I'm not sure if you guys are aware about it, but it's good to go and Google and just check. And through that fund, what we've done is with 20 million GCF equity fund and 5 million grant, just 5 million grant for the entire setup of 110 million project has been established. And these are some of the examples which has happened in the countries where private sectors can come up with these ideas, because it is when we talk about climate action, it's just not only the government's responsibility, it's each and every one of us who are in that partnership that are also helping the government to understand what are the priorities. And that's where the multi-stakeholder discussion comes into play, where you are part of the discussion. And I'm sure in on the Green Climate Fund, there is a steering committee in Nepal, which also looks at climate financing with the Ministry of Finance. And these kind of multi-stakeholder conversations, I'm sure the private sector is part of it. If they are, and that is the space where you kind of bring up these kind of engagements and the type of projects that you need to be working or needs to be looked at at Nepal. So that is one thing where GCF can come in, can play a catalytic role in terms of, well, like I mentioned earlier, A is of de-risking of funds, but we can also be an anchor investor in equity projects, where we take the what you call the junior subordinated loans or that portfolio, and we really help the equity fund or the project move forward by putting that investment forefront. We've done that in Chile for a renewable energy project. We provided about 60 million on the equity fund for a 1 billion project that had to be mobilized. And so we have done that. And these are for renewable energy programs, for agriculture related programs, or for different type of projects, because obviously climate sector affects all the sectors. So wherever there is an opportunity for private sectors to come in, we are definitely there to help. And that's where I was mentioning is, if the ideas have not been cooked, or if you need more investments to cook those ideas, then we do have those facilities available. So one is through Readiness Program. We have a Readiness Program, which is 1 million per year per country, for developing countries, where you can, where the government, with the private sector can come up with opportunities of what type of concept notes needs to be built in, or what type of area needs to be looked at. That's one. And once the concept notes or the projects have been identified, then per project, you also can get a project preparation facility resources, about 1.5 million, just to expand that project into a full funding proposal. And because you obviously sometimes you need to do different kind of vulnerability assessments, you need to do social analysis or financial analysis or pre-feasibility, and these things are costly, and I can totally understand that. And that is where we can come in and help and work together. So we help to facilitate at the origination stage of the projects. And if there are certain projects that are really make sense for Nepal and that needs to come in, where private sectors can play a big role, I think there is definitely options that we can look into. We can be part of the facilitator, the moderator, and then help that engagement with the government.
Thank you. So I think, thank you, Anupa, that was very, very useful. I think just getting a perspective on, what GCF does and what, we are really taking advantage of you being in Kathmandu and understanding all this. So we move on to questions. So we have about 20 minutes, and which means we can take a few interventions from the floor. So we say at Neftalk, there's the ask principle. So A is for always introduce yourself, S is for stick to the topic, and K is for keep it short. So 60-second questions. So please raise your hand and a microphone will get to you. The gentleman in the front,
please. Hi, my name is Prasanna. I work with a company called KPMG in India. Yeah. So 60 seconds. One, I think, is an observation. The second one is a general question for the panel. I think the observation would be, I think, as a country, and seeing how green financing is still very, primitive stage, I think, compared to the rest of the world. I think my request to the development actors in the room, given that there is a larger risk appetite, would be to be able to talk about failures for two principal reasons. One, I don't think the rest of the actors or rest of the players in the room have the same appetite. So I kind of feel like as a country, we're not encouraged to talk about failures. So if we could amplify the conversations around what didn't work, it would be really useful for the rest of the actors coming in at this stage, because it will tell them what not to do, or more importantly, how to do things better. That's observation. I'm sorry, I'm going to take 30 more seconds. I have a long question. What I learned from the session, and thank you so much everyone on the panel, was that I think if you want to scale up in this sector, you either have increasing capital flows or you develop innovative financial approaches like you mentioned, Raji. And I think these, we're talking about two general actors in this category. One would be capital providers, otherwise the rest would be financial intermediaries, banks, so on and so forth, which is very well sort of covered. So I kind of get a sense from the conversation today that what was missing was we didn't speak about a pipeline of sort of bankable green projects. Usually either through a national development planning process or the appetite to sort of set up a financing facility that would support a pipeline preparation. And I kind of feel like this is important because we spoke a lot about partnerships with the government, partnership with the private sector. And unless sort of this is present for everyone to look at, I kind of get the feeling that, for financing from institutional investors, commercial banks and capital markets will probably go elsewhere. Or in the case of Nepal, to be very specific, real estate. And so my question, sorry for more than 60 seconds, is so do we see the actors in this space coming together to make it happen in the near future? Because it increasingly seems like it's going to be a long shot, given that Ritu mentioned that there's an aspiration of a 30 billion investment in the next 10 years.
Thanks, Prasanna. Next. Okay. Can I see any hands up? Okay, so maybe I'll just, who wants to go take this first? Yeah, Chandni.
Thanks, Prasanna. I think that was something that I definitely wanted to talk about and maybe didn't articulate it in the way that I wanted to. I think pipeline development is something that everybody talks about, right? When you walk into a program that talks about investments, everybody talks about where's the pipeline. I think that's true for FDI in general, for investments in general, but especially for climate finance. I think you're sitting next to somebody who is, she has an excellent program that is supporting the renewable energy space in developing pipelines. There, I think the Viability Gap Fund that they've created with AEPC is working in this regard. And then they have 8 windows. They have something for financial intermediaries. They have something for SMEs that are looking to, not necessarily startups, but I think there's space for demand aggregation. There is space for support in marketing. And so there's all kinds of different support that is being provided. I think this is also true for other sectors, and that's something that we're taking very seriously, I think, at FCTO and would like to, work in this space. Thanks.
Thanks, Chandni. Maybe I'll, bring in Peter here in terms of, sort of your own experience on pipelines and how you have seen, because you've been working in multiple countries, and any example or anything that comes to the top of your mind to talk about how this issue can be addressed.
So you'll have to forgive me, Sujeev. I didn't hear entirely what the gentleman said that posed the question. So I've been trying to catch up on what other people have subsequently said. What specifically is the question?
Okay, no, I think it's to issues around pipelines, identifying pipelines, getting pipelines ready for, for anything to begin. That's the big challenge that we always find, and it's little talked about. And I think Chandni was emphasizing on that and what FCDO is looking at. So any experience that you are looking at in terms of pipeline challenges and where some things that have happened outside Nepal that could be useful lessons we can learn from.
Okay, I guess a couple of observations to make. Firstly, pipeline development has probably been one of the most difficult things I've had to deal with in my whole career, in PPPs, in startups. And I think there are two things that are of major consideration here and that have to be addressed. One is the gestation period. It does take a while to get a pipeline built, and there's a general impatience with that. And in the end, that I think is it's a false economy, because if those pipelines aren't robust, then the investors won't come in, or the whole operation gets too expensive. So that's the first thing. The second thing I've found is that generally investors want to come in not at the startup stage. They want to come in a little bit later when there's some evidence of growth. So a lot of the bank focus through governments actually has been supporting that very early handholding through various entities, be they incubators, accelerators, and so forth, to try to get them moving in the right direction to a point where money does want to be invested in them. And I'm sure, you know, Siddhant can also sort of cite, you know, what his death rate is on any pipeline his organization looks at the outset. It's a very tough market. I think the third and final observation I'd like to make is in the project bank that the government is developing for its own operations and the plans it's got to sort of strengthen its ESRM requirements for projects that the government would finance, which I think is a very good sign for the future. But again, it's going to take a while to have this happen. It goes a little bit to an earlier remark about getting ministries lined up so that they're, you know, all rowing in the same direction. And these are very critical tasks for us, both in terms of developing a pipeline, but also the key players that make those pipelines happen, making them work to, you know, certain well-founded supportive criteria to sort of address climate issues. I'm not sure that necessarily addresses the question, but again, time and capacity building is always critical to pipeline development. You know, whatever sector I've been in, whether it's in infrastructure or in, you know, enterprise development, there's very common problems with both. Or problems is not the right word. Challenges that you have to address through different types of instruments. Thank you.
Thanks, Peter. Yeah, please.
BO2 is basically a finance first model with an impact in investments. But having said that, you know, when you're doing climate financing, there's a cost to the ESG measures, there's a cost to climate smart approaches, and a small SMEs, their balance sheet is not going to be able to afford that change. So being a DFI funded entity, BO2, has that technical assistance support where we do sort of a matching sort of 75-25. 75% goes towards enhancing the ESG measures and climate smart approaches to the investment framework, to the framework of the company. And the 25% comes from the balance sheet. That's doable. Now, in terms of pipelines, FDI is not allowed to get into real estate or stock market. So we can't get into, just to buoy up our IRRs, we cannot invest in those areas. So we are extremely concentrated on and furthermore, what also happens is that we have a sectoral exposure limit. So not all our fund goes into one sector. So in terms of our climate investments, we have pretty much reached that threshold and we cannot invest anymore. So that's being prudent, but that's the commercial aspect of it. I can't emphasize more on how important it is for the commercialization aspect of any investment, for the sustainability of that investment. Grants and charities just don't work anymore. The investees have to have the skin in the game, so they feel. Otherwise, it's going to go the way of the micro hydro projects of the past. No one had ownership over it. So, you know, the donors and the investors out there, please ensure that there is a return.
Thanks. Anupa, you want to add anything on the pipeline issue?
I think not much actually, just probably, I mean, when I think about pipelines, it just makes me go crazy sometimes because we work so much on pipelines and try to really build a very reliable pipeline that really captures all the priorities. Different countries have different ways of working. And what we are trying to do right now is work with the government on a country programming document, like most of the other bilateral or multilateral or UN agencies also do. So what we try to look into is We try to help government in identifying, like I was mentioning earlier, on the priorities that they have identified from different sources, different type of assessments, analysis that needs to be a climate project. So what we try to do is in that, we try to help them to build your pipeline into the country program document. So we also want to see as to what are the projects that are eligible for climate finance, not only for the Green Climate Fund, for other funds as well. So we've done that in Bangladesh. I remember one time there was, I think it was 270 or 300 projects that were part of the pipeline. I said, no one's going to fund all of this until and unless we really try to capture how we merge different kind of projects, how we really look at the sectoral aspects of it. And what we need to do is we need to really refine it in a way that we can make it more implementable. Because sometimes it just becomes a very, some are very research focused. I'm not saying research is bad, it is good, but then we need to put it into a different category than we put into a private sector project or a public sector project. So I think when we do pipeline management, we really need to look into what are the priorities, how do you want to structure it, and then define it in a way so that when we are going to different type of partners or donors or like you said, not just only for grants, but even for different kind of bilateral funding mechanisms, we know what we are, what is in with us and what is the skin of the game, basically, in terms of understanding what needs to be done. So those are some of the things that I probably wanted to mention, and also wanted to mention to respond to what Siddhant just mentioned right now in terms of the borrowers. Like if you look at the borrowers at the community level or microfinance institutions, some do not have collateral capacity. So how do we really help them? So when we are looking into designing pipelines, we really need to look into those actors who are at different levels. And there are, like for example, GCF currently provides guarantees. We provide different kind of financial instruments. Apart from grants, which are basically many of them are providing, we provide loans, we provide equity, and we provide guarantees. We don't have many on equities and guarantees projects right now because we are a fund that started coming into operation from 2015 onwards, but we already have 190 projects globally and 10 billion of commitment already. So we are moving quite fast, and we want to obviously keep increasing our footprint because climate actions are very, very urgent. So in that aspect, we do have we do provide guarantees and as collateral requirements for SMEs. We have done that in different countries. So maybe those are some of the things that Nepal can also look into and see how, when we are doing pipeline management, basically categorize them into different sections or different areas and really see how that could be managed. Because otherwise, if we put everything into one box, I think it becomes very difficult.
Thanks, Anupa. I think we have opportunity for one, yeah, at the back. Microphone at the back. Sonam, behind you. Sorry.
Hi, this is Alpa, and I run law. And what I want to just maybe state here is I disagree with Peter on two counts, is that for green fund projects, I disagree on that. To put a case forward to say that one of my clients with not-for-profit founding wants to set up a it's for the Musahar women. The only reason why they are not being able to start is because they're not being able to meet their threshold. And they do not have control over the company if they invest. So, you know, we are talking about SME financing. The finance is there, loads of it. Where is the implementation and the policy that will enable finance to come into Nepal for such projects? That's the only problem I think we're facing right now.
Thank you. We'll take one more question and come back to the panelists. Yeah, we have two hands. I can see yeah. Please put your hands up so that I can see and you can get the mic. Yeah.
Thank you, sir. I'm Pawan Mandari from Naval Investment, working as an associate. So to put to the panelists, what I'd like to say is, in terms of any private equity funding business, and if that particular business has implemented ESG consideration and climate financing perspective, if that particular business fits that criteria, then what sort of threshold required rate of return do you seek from that investment annually? And how do you differentiate yourself from a normal investor investing in the business? If you are seeing from that impact investing lens, then is there any threshold criteria that the business should generate this much amount of return annually? And how do you distinguish from a normal investor? And how are you seeing the exit opportunity? So you have made the investment, now the exit opportunity, how are you evaluating it? Thank you.
Thanks. We'll take the final question, gentleman at the right. Yeah.
Hi, panelists. I'm Maitra. I'm from Noble Invest. Just to add to my colleague's question, I would like to directly ask Peter on one important aspect that I feel is very important in the context of Nepal. We've seen in that in our neighboring countries like China, Bangladesh, and India, there has been a strong a need for sustainable reporting, and with India introducing the BSR reporting for its listed entities in the stock market. What do you feel, or do you feel that there's a need for sustainable reporting in for the Nepali stock market as well? Because I think coming from the point of view of our lens, we do require such reporting. The reason being that firstly, Noble Invest as an investment bank is trying to actually work and have a framework for ESG develop. And since we've been continuously reviewing literatures, what we found is that these kind of data, there's a dearth of data that would actually help our cause. So do you feel that actually having to handle SIBON, our regulator, would go a long way in formalizing data management for listed companies in Nepal, and that would actually pave way for private equity funds like Buta and even fund managers like us in the future to actually formulate ESG scores and develop frameworks for our companies.
Thank you.
Thank you.
Thank you. I think I'm just being mindful of the time. So I'll go to Peter to, sort of answer this question. Hopefully you heard that on sustainable, reporting. And also if you have any closing remarks. Over to you, Peter.
So very quickly, with regard to SEBON, they are very, I would say, quite proactive in considering the need for listed companies, etc., to start providing greater disclosure on climate. And they are moving in this direction. We think it's a very good direction to be moving. It's part of a large suite of actions that have to be made to ensure that these markets are climate resilient. The key thing is that the dialogue they have to have with the different players in their market, because it's one thing to issue a regulation, it's another thing for it to be adopted or implemented correctly. So I think there is work to be done, but what I believe is that this will be taking place in a fairly systematic way over the coming period. Again, you have to bring the market on side in doing a regulation. It's an iterative process. So yes, I agree with you, disclosure is important, and I think SEBON is moving in that direction. In fact, I know they are. Very quickly, as a concluding remark, I think the climate finance agenda, it's frontier work in many markets. A lot of agencies and regulators are just gearing up to do this. For example, there's nothing in the Basel principles around climate at the moment. So this is something the BIS and a lot of other people are working on. Similarly, in the securities, the international organization that responsible for securities and for insurers, these entities are looking to see how they can support their members. And I think we're going to see significant movement over the coming years in this area, really bringing it up to a much higher standard of attention. And ESRM will be far more detailed in terms of the types of issues to address in climate. But it will be a process, and it will vary by country, by regulator, by the nature of the market, and we always have to be sensitive to those realities. Thank you.
Thank you, Peter. Maybe I'll then move on to Sid to answer the question of threshold return and also the issue on, the investment threshold. You have been also emphasizing. Maybe you want to just take that up also.
For us, internal rate of return is very important for our investment. I mentioned we're finance first commercial investors. So we're looking at least 20% IRR on our investment. Okay, there could be a few percentage below that. The impact is huge, but we would like to see at least a minimum of 20% IRR in our investments. Now, you talked about the framework ESG. We are mandated to report to IFC on our environment, social environment due diligence is actually passed on each investment by IFC. That means the 8 measures that we have to follow under IFC's ESG measures. Those measures should not be negative. So there is a framework. Beyond that, we also follow the PPCR's framework and also GIN's IPIS format. So, the thing is, you need to invest in your human resource to be able for them to be able to monitor these investments and to ensure that there is intervention. So, that's why I say we are a family focused fund, because we have that ability to do that. But right now, it's a bit too early to see how our climate investments are going to turn out. We are all just waiting and watching. After all, this entire thing about private equity is new, and beyond that, climate financing is even newer. So, maybe in the next 3-4 years, when we have this meeting again, we'll be able to give a wonderful picture, hopefully, of our investments.
Any concluding remarks, Sid? You want to, Siddhant, any concluding remarks you want to have?
Yes. In conclusion, private equity is, I think, here to stay. I think there's enormous possibility when you have investments under a structured method of investing, transparent, and dictated by international best practices. We have made 4 exits already. So there is possibility of exits. We haven't gone into IPOs. We're SME finance. So IPOs are not in our ambit right now, but these are basically sponsored by buybacks. And the other thing is that we've also been able to repatriate 2 tranches back from our exits to IFC. So repatriation was actually easier than making investments. It was faster. So, the Nepal is full of surprises. The only thing I can say is that patience is a virtue, and everything happens eventually.
Yeah, Chandni, any concluding remarks or anything you would like to?
I guess after that positive comment, I think I'd want to go back to talking about the importance of FDI in creating pipelines, and that we need a slightly maybe varied approach from the regulators in terms of thinking about, what does it mean to lower the FDI threshold? I think that can create a lot of possibilities in Nepal. In addition to that, I think there are also different financial instruments that need to come in to support, SMEs at different stages. And I think this is something that we'll definitely be also thinking about. Thanks.
Thank you, Chandni. Anupa, concluding remarks?
Thanks. I think we did talk about a lot today, and I was actually very happy to share information about Green Climate Fund. It is almost like an outreach program for me as well, because we do not get an opportunity to talk to audience at the country level, because we are based in South Korea. We do not have country offices as yet. So our engagements are always mixed with missions and country missions, and with COVID happening, it's not been possible. So I think this has been great. Just want to mention one more thing is with the current pandemic that's ongoing still, GCF has been facing a lot of focusing on increasing demands that are coming to us with the developing countries to support climate resilient development, while we are also looking at recovery efforts on COVID. So these are some things that probably we can also pick up when we are looking at private sector projects, because we need to look into the recovery mode while we are also looking at climate, because I think these are the two important aspects or two important factors that we need to look into as we try to get out of or make the country more resilient. If you're looking at a climate project that I want to always mention is, please try to differentiate between a development program, because that's when it does not come to us. Because if you are focusing on climate, you need to have very strong climate science behind it. And there are options available and there are analysis that needs to be done where we are happy to support the country on those measures. Nothing from my side. Thanks.
Thank you. I think it's been a great panel, and some of the key takeaways I'm looking at is that some of the words I'm taking from the panelists is definitely prioritization is a big word, capacity building, and I think learning from others. And it's just great to have Anupa, talk about other countries and to see that. And it's great to have Nepalis in the Green Climate Fund offices, many of them now, from what she tells me, and Nepal should leverage that to its maximum. Also, the positive thing is also that, as Peter was mentioning, that be it advanced countries or developing countries, we are at a very similar stage. It's like waiting for a Netflix release, whether you are in DC or whether you're in Kathmandu. So we are not very far behind. And if we can get the right policy paradigms working, that's what's going to take us ahead. And I think for Nepal Economic Forum, that's what interests us, to work on the policy paradigm, to see that what is it required from the regulator side, what is it required, how do you bring it multi-stakeholders into a room and have these type of discourses, and discussions would continue. A round of applause to our speakers, Anupa, Chandni, Peter, and Siddhant. Thank you, Peter, for being with us. I know it's been a very busy day for you, but thank you being here, and thank you for all of you coming here on supposedly a Bandh day in Nepal. And I think in Nepal, Bandh are passé. I was doing a maths today that I was telling my team that it requires nearly $200,000 to really make a Bandh possible now, because you have to feed beer, alcohol, and other things to your stuff to burn tires. It's very difficult now. I don't think Bandhs are going to happen. Hopefully people will not prove me wrong. And I think it's great to have a full pack audience here, and the discussions are going to continue. Thank you to the team that relentlessly work on such events to happen. And we would look forward to meeting you another Neftalk. Day after, we have a roundtable on Nepal and the world on the BBI and motor vehicles agreement. If that's of your interest to us, do write to us. And for those who may be interested in this program, the video would be uploaded on YouTube, Nepal Economic Forum channel, and do sort of share that. Visit us on our new look website and follow us on social media. Thank you all. Have a good evening.